Hey there, James Preston with you for Kalkine, and if you think the cost of buying a house ends at the listed price, think again. Not only might you face the cost of stamp duty, you'll also be hit with a land tax. I know, another tax. Like you, I wish it didn't exist, but it's something you'll have to be aware of. And in this video, I'll give you the complete lowdown. But first, make sure to subscribe to the channel and press the bell icon to keep across the latest videos from Kalkine. Land tax is an annual tax that landowners pay to state and territory governments. If your business owns a property, then it's likely you'll need to pay land tax on it. It applies everywhere in Australia except the Northern Territory. The concerned laws in states are comparable, but they do vary. The amount of land tax that is levied on an entity depends on the combined unimproved value of your taxable property. Generally, one does not have to pay land tax on their permanent residence. Make sure you know what your entitlements are. The land owned by certain organisations, for example, can be exempt from land tax. For the 2021-22 fiscal year, there have been some changes made to how land tax is assessed for land owned in multiple ownerships or held in trust. A few provisions were also introduced for group land owned by related corporations. If you own land with different people or corporations and land tax applies, you may receive more than one land tax assessment. Land tax is calculated based on land use, site value, and ownership at midnight June 30 each year. So, who determines the site value of your property? The Office of the Valuer General Value determines the value of a site. The value is determined using industry-recognised valuation processes, which include sales and related market evidence, along with all other matters that may have an impact on the value of a property. The site value used for land tax is the value of a land parcel excluding structural improvements, but including improvements such as draining, filing, retaining walls, excavating, grading or levelling of land, removal of sand or soil, stone, rocks, and the cleaning of timber, scrub, and other vegetation. So what are the various types of land ownership? Ownership consists of every parcel of land owned by the same registered owner. This could be one or more persons, trusts, or corporations. The lawful owner of the land is those entities that are registered on the certificate of title. However, in special cases, there are some exceptions to this general rule. Jointly owned property is any property for which there are two or more lawful owners. These two or more owners could be any combination of people or entities who have a reason to own property together. When the two parties are husband and wife, it gives them the matrimonial status of joint ownership of their assets. Another form of ownership is known as sole ownership or individual ownership. In this, the individual holds the sole right to decide if they want to sell the property. For example, if the husband was to sell his house, he is not legally bound to take his wife on board. Now, there are also differing taxation systems relating to the states and territories that are worth delving into. In the Australian Capital Territory, the amount of land tax you pay is made up of two components: a fixed charge and a valuation charge. The fixed charge for land tax is $1,392. The total valuation charge for a year is calculated by using a rating factor on the average unimproved value, also known as the AUV. The AUV is calculated as the average of the property's unimproved value over several years as follows. 2019 and 20 and before averaged over the last 3 years. 20 and 21 averaged over the last 4 years. And 21 to 22 and thereafter averaged over the last 5 years. In New South Wales, the threshold for land values keeps on changing every year and is applied as follows. There's a general threshold, which is $100 plus 1.6% of land value above the threshold up to the premium threshold. The premium threshold equates to $61,876 plus 2% of land value above the threshold. The threshold is published annually in the Government Gazette in October and is applied to land holdings on the 31st of December each year. Land tax is applied for the full year following the taxing date of 31st of December each year and without any no pro rata calculations. And finally, for the Northern Territory, it's good news if you're looking to make a shift to the outback. The Northern Territory does not levy any land tax. Death and taxes, always two certainties of life. But if you'd like a third one, namely vastly improving your current knowledge as an investor, then the best way to do that is to head across to kalkinemedia.com. If you enjoyed the information contained in this video, then make sure to like, share, comment and subscribe, and of course don't forget to press the bell icon to stay across the latest videos from Kalkine. I'm James Preston for Kalkine Media.